What if I told you that right now, in America, millions of people who once dreamed of buying a home are suddenly walking away from the market? Not because they don't want a house, but because the entire system feels broken. For decades, owning a home was considered the ultimate symbol of success, a stable life, a safe investment, the American dream. But today, something shocking is happening. Houses are sitting on the market longer. First-time buyers are disappearing. Mortgage applications are collapsing. And even people earning six figures are starting to say the same thing. I simply can't afford to buy. So what changed? Why does nobody want to buy homes right now? Is the housing market about to crash, or are we entering a completely new era where home ownership becomes a luxury only the rich can afford? Stay with me until the end, because the truth behind America's housing crisis is far bigger and far scarier than most people realize. Right now, the average home price in many U.S. cities has reached levels that feel almost impossible for ordinary families. Just a few years ago, people were fighting over houses with bidding wars, offering tens of thousands above asking price, waiving inspections, and rushing to buy before prices climbed even higher. Everyone believed real estate only goes up. But then came the mortgage rate explosion. Interest rates that were once sitting near historic lows suddenly skyrocketed, and that changed everything overnight. Imagine this, a family that could comfortably afford a $500,000 home a few years ago may now qualify for something closer to $350,000, even if their income stayed exactly the same. The monthly payment became the real killer, because buyers aren't just looking at the sticker price anymore. They're looking at the terrifying monthly cost. Mortgage payments, property taxes, insurance, HOA fees, maintenance, it all adds up. And suddenly, owning a home doesn't feel like freedom anymore. It feels like financial suffocation. But high interest rates are only part of the problem. The deeper issue is that wages simply haven't kept up with housing prices. Over the last several years, home values exploded far faster than normal salaries ever could. In many cities, prices jumped 30%, 40%, even 50%, while average workers saw only tiny raises. That created a dangerous gap between reality and affordability. Young people especially are feeling trapped. Many millennials and Gen Z buyers grew up hearing that buying a home was the smartest financial move they could make. But now they're looking at homes costing $500,000 while carrying student loans, rising rent, credit card debt, and inflation draining their savings every month. For them, buying a house no longer feels exciting. It feels impossible. And here's where things get even more interesting. Some people actually want the housing market to crash. Why? Because they believe prices became completely disconnected from reality. They watched investors, corporations, and wealthy buyers scoop up homes during the pandemic, while ordinary people got pushed out. Entire neighborhoods transformed into rental empires owned by giant companies. In some areas, investors were buying homes faster than families could even schedule a showing. That created anger, frustration, and fear. Because when homes become investment vehicles instead of places to live, regular buyers lose hope, and hope is disappearing fast in today's market. But there's another psychological reason nobody wants to buy right now. Uncertainty. People are scared. Scared of overpaying, scared of buying at the peak, scared of watching prices fall after signing a massive 30-year mortgage. Every headline about recession fears, layoffs, inflation, and market instability makes buyers hesitate even more. Nobody wants to become the person who bought the most expensive house at the worst possible moment. And honestly, many Americans remember the 2008 housing crash. They remember foreclosures, financial collapse, and families losing everything. So even though today's market is different in many ways, the fear remains deeply rooted in people's minds. Buyers are no longer rushing emotionally into homes the way they did during the pandemic frenzy. They're cautious now, sometimes overly cautious, and sellers are struggling to adjust to this new reality.
Many homeowners still believe their property is worth the insane prices seen during the peak of the market. They don't want to lower prices. They don't want to negotiate, but buyers simply can't afford what sellers are asking anymore. That creates a frozen market where neither side wants to move. Sellers refuse to drop prices, and buyers refuse to overpay. The result? Stagnation. Homes sit unsold. Open houses stay empty. Price cuts become more common, and slowly the excitement disappears from the market. Yet, strangely enough, despite all this negativity, housing inventory in many areas is still limited, and that's because millions of homeowners are trapped by their own low mortgage rates. Think about it. Someone who locked in a 2.5% mortgage a few years ago has almost no incentive to sell and buy another house at today's much higher rates. Moving would mean doubling their monthly payment, even if the new home costs the same. So people stay put. They renovate instead of moving. They delay upgrading. They hold on to their homes longer than expected. This creates a bizarre situation where buyers don't want to buy, but sellers don't want to sell. And that keeps the housing market stuck in a strange, uncomfortable limbo. Meanwhile, rent prices remain painfully high across many American cities. So now millions of people feel trapped between two terrible options: continue renting forever and watch money disappear every month, or buy an overpriced house with crushing monthly payments. Neither option feels good. And that emotional exhaustion is one of the biggest reasons people are stepping away from the market entirely. They're burned out, financially and mentally. Social media has also played a huge role in changing how people think about home ownership. For years, influencers promoted massive homes, luxury lifestyles, and real estate investing as the path to wealth. But now, many people are starting to question that narrative. Some are realizing they don't want to spend 30 years chained to a mortgage just to impress society. Others are prioritizing flexibility, travel, remote work, or financial freedom over owning a home. The pandemic changed how people view life itself. Suddenly, stability seemed guaranteed. Not anymore. Jobs changed, cities changed, priorities changed. And for many Americans, buying a home no longer feels like the automatic goal it once was. But here's the part almost nobody talks about. Even though buyers are struggling, the housing market hasn't fully collapsed because America still faces a major housing shortage. For years, not enough homes were built to keep up with population growth. Construction costs increased, land became expensive, labor shortages slowed development. So despite weak buyer demand, supply remains tight in many regions. That's one reason prices haven't crashed the way some people expected. It's a battle between affordability and scarcity. And right now, nobody knows which force will win. Some experts believe prices will slowly cool down while wages eventually catch up. Others think a major correction is still coming. And then there are those who argue this is simply the new normal, a future where owning a home becomes increasingly difficult for average Americans. If that happens, the consequences could reshape the country for generations. Because owning a home has always been tied to wealth creation in America. It's how many families built financial security and passed opportunities to their children. But if younger generations are permanently locked out of the market, the wealth gap could become even worse than it already is. That's why this conversation matters so much. This isn't just about houses, it's about the future of the middle class itself. And the truth is, the housing market today reflects something much bigger happening across the entire economy. Rising costs, growing inequality, financial anxiety, and a generation increasingly questioning whether the traditional American dream is even attainable anymore. So when people ask, why does nobody want to buy homes right now? The answer isn't simple. It's not just high prices, it's not just interest rates, it's fear, uncertainty, frustration, exhaustion, and a feeling that the system no longer works for ordinary people. But here's the twist. History has shown that housing markets move in cycles. Fear eventually creates opportunity. The buyers who stay patient, informed, and financially prepared often benefit the most when the market finally shifts. The real question is not whether the housing market is broken today. The real question is what happens next. Will prices finally come down? Will interest rates fall again? Will younger Americans regain hope in homeownership? Or are we witnessing the beginning of a future where owning a home becomes something only a small percentage of people can achieve? One thing is certain: the decisions made over the next few years could change the American housing market forever. And if you think this crisis only affects buyers, think again, because when fewer people can afford homes, the impact spreads across the entire economy. Banks, construction companies, real estate agents, investors, renters, families, everyone feels the pressure. So maybe the real reason nobody wants to buy homes right now is because deep down, people are waiting for clarity, waiting for stability,